Welcome to Explain the Charts, your go-to source for in-depth market insights. Today, August 4th, 2025, we're tackling the recent price action of Microsoft, ticker Microsoft, which has been quite perplexing despite seemingly positive news. Reports highlight incredibly strong Q2 earnings for calendar year 2025, or fiscal Q4 2025, with revenue up over 18% year-over-year to $76.44 billion, significantly exceeding analyst expectations. Their intelligent cloud division, including Azure and especially their AI business, are experiencing explosive growth, with AI revenue surpassing a $13 billion annual run rate, a staggering 175% year-over-year increase. Analysts are overwhelmingly bullish, maintaining a moderate buy consensus with an average target price around $609 and some even as high as $675. Yet, if we look at the daily chart, the recent price action tells a more complex story. Microsoft stock opened today, August 4th, at $524.11, trading near the top end of its 52-week range of $344.79 to $555.45, but this belies the dramatic volatility of the past few trading days. Let's zoom out to the daily chart and observe the broader trend from early 2024 through mid-2025. Microsoft has been in a clear long-term uptrend, driven by its consistent innovation and strong market position, especially in cloud and AI. We can see a consistent pattern of higher highs and higher lows, indicating sustained investor confidence. The $400 level acted as a significant support zone earlier in the year, providing a strong bounce, reinforcing its long-term bullish channel. This overall positive trajectory sets the stage for how the market might interpret short-term fluctuations. Now, let's zero in on the recent critical period, specifically the last few daily candles leading up to today, focusing from July 29th through August 1st. Notice the candle for July 30th. Despite an intraday high of over $560 seen on shorter timeframes after the earnings release, the daily candle closed at $513.24, showing significant selling pressure that day. However, the real surprise comes with the next day, July 31st. The stock opened with a massive gap up at $555.225, significantly higher than the previous day's daily close, likely reflecting strong overnight positive reaction to the stellar earnings. But after this grand opening, we saw an immediate and aggressive sell-off, with the price plummeting to close at $533.50, forming a large bearish candle, a strong reversal signal. This, by the rumor, sell the news phenomenon or simply extensive profit-taking after the initial surge, clearly dominated the session. Following this, the August 1st candle continued the downward momentum, opening at $535 and closing lower at $524.11. This short-term reversal, despite robust earnings, creates significant questions about immediate market sentiment. To truly understand the dramatic July 30th price action, we need to dive into the 15-minute chart, specifically looking at the period from late afternoon UTC on July 30th through the close of that day. Observe the candle at 1957 Universal Time coordinated on July 30th, a phenomenal surge, with the price jumping from an open of $512.57 to close at $545.05 in just 15 minutes, indicating the exact moment the market digested the earnings news. This was a clear, high-volume reaction to the positive report, pushing the stock well into new intraday highs, eventually reaching $562.17. However, immediately after hitting these peaks, profit-taking kicked in hard. Subsequent 15-minute candles show consistent selling pressure, driving the price back down from those intraday highs. By the end of the July 30th trading day, the price had retraced significantly from its peak, demonstrating strong supply overwhelming demand, even on such bullish news. This illustrates that even outstanding financial results can lead to short-term corrections if the initial move is deemed overextended or if traders simply lock in gains. Now, let's take a look at the 1-hour chart to analyze the intermediate-term price behavior leading up to these significant events. While this hourly data provided concludes before the dramatic July 30th earnings reaction, we can see Microsoft was largely consolidating or making steady gains in the period between mid-July and late July. This chart demonstrates less extreme volatility during regular trading hours, often displaying tighter ranges and more predictable movements prior to major news catalysts. It's important to note that the immediate, rapid response to the earnings news, as we saw on the 15-minute chart, was so strong that it bypassed much of the typical hourly progression, leading to a dramatic daily candle formation. So, what does all this mean for Microsoft in the short and long term? From a bullish perspective, the underlying fundamentals are exceptionally strong, with Microsoft dominating key growth areas like AI and cloud computing. The consistent earnings beats and highly bullish analyst price targets, ranging into the $600s, suggest significant upside potential in the mid to long term. The current price of $524.11, holding at Friday's close as of today, August 4th, indicates some stabilization after the initial post-earnings volatility, which could be a bullish sign if it forms a new support. However, on the bearish side, the aggressive selling pressure seen immediately after the earnings surge on July 30th and 31st is a clear warning. The quick rejection of the 52-week high of $555.45 suggests this level will act as strong resistance in the short term, requiring significant buying volume to break through. A break below the current $520 to $524 support zone could see the stock testing lower support levels around the $490 mark, which has acted as a pivot point in the past. To recap, keep a close eye on a few critical price levels. The immediate support to watch is around $520 to $524. A sustained bounce above this level, ideally with increasing volume, would reinforce a short-term bullish outlook and suggest the worst of the post-earnings sell-off is over. The key resistance lies at the recent rejection high of $555.45, and above that, the analyst targets around $600 to $650 provide long-term upside targets. A strong push above $555.45 would make a move towards analyst targets much more likely, perhaps with 70% probability given the underlying fundamentals. Conversely, a decisive break below $520 could lead to a retest of $490. A scenario we would give a 30% likelihood if negative market sentiment persists or if there's any further profit-taking pressure. For traders, watching volume patterns on these moves will be crucial for confirming direction. Also, keep an eye out for any further Microsoft announcements regarding their Copilot AI initiatives or Azure cloud expansions, as these will be strong drivers. And as always, factor in broader market sentiment and economic indicators when making your trading decisions on Microsoft. Thank you for tuning in to Explain the Charts, and we'll see you next time.